Ranking indicators and how well they work in algorithms. RSI, let's put this in the A tier. Works really, really well for mean reversion systems or range bound systems. Ichimoku clouds, complete garbage, don't work. Never use this. It's more just like a cult following on this, but they don't work. Stochastic, let's put this in the C tier. Works better on lower time frames, but for high time frames, I'd much rather use something a little bit more accurate. When this is coupled with other indicators, it actually can work pretty well, but on its own, I wouldn't use it too much. MACD, we'll put this in the B tier. It's really good at identifying reversals or potential reversals coming up shortly. So if you have a MACD divergence coupled with a break of a lower structure, this actually can add some great confluence to that position, minimizing your sample size, but increasing the probabilities, strike rate, and profitability of that system. Bollinger Bands, let's put this in the B tier also. Fantastic for mean reversion systems. Okay, breakout mean reversion systems or measuring a distance from the midpoint up to the high and then aiming for that midpoint again is really good for those mean reversion systems. Once again, I'm not the biggest fan of mean reversion systems because of the low R to R. I really want to maximize my profit at all times, but they do work really well in that regard. Average true range, this is in the goated tier for sure. Now, I love using the average true range because it's such a dynamic tool that you can use that works really well with your in sample and out of sample and over a long time frame because it's always adjusting to new information. When you use your average true range, it takes the last 10, 20, 30 bars. It grabs the range of those bars and gives you an average number. So if you have more volatile regimes happening at the time, your number will be bigger, reflects in the markets, and then your strategy can still align with what's going on in the market at the point in time. Fantastic. I highly recommend always using an ATR wherever you can. Moving averages, it's close, but we'll put it in the A tier. How I use moving averages is several different ways. First one is mean reversion. How far is price away from the EMA, measuring the gap between that and then getting some kind of candlestick pattern or other confluences to trigger a sell position to revert back to that EMA or a fraction of that, 30%, 40%, 1-to-1, 1-to-2, whatever it happens to be. That's a fantastic way to use an EMA. The other one is a trend confirmation. For example, when you are above the EMA, right, for X amount of candles, you are clearly in an uptrend. So being able to use that, you can filter out a lot of unprofitable trades that are just getting wicked in and out. Okay, so using your EMA for those